Well, here we go again with the final accounting. Now we're at the point of Schedule C. And once again, I won't repeat all of this. Just know you're preparing Schedule C, adding on as we go to the original document you started when you did the previous presentations. You will need to have these documents handy for you, including the inventory. All right. The purpose of Schedule C. If you just look at the Schedule C, you can see it's pretty simple. It is distributions. Remember that Schedule C should reflect items or amounts distributed to beneficiaries during the accounting period. And they're shown at their inventory value, or if there had to have been an adjustment, they're shown at their adjusted value. Now, adjustments are dealt with in Schedule D, which is the next presentation. The items that you're going to schedule for this assignment, for this part of the assignment, will not be affected in Schedule D. I've kept it simple so we can deal with Schedule D in another context. So if you look at the inventory, these are all the carrying values of the inventory amounts. So we keep that idea straight. These are the carrying values right here. We have the big bank checking account, the cash, etc. And we have some assets that are non-cash assets, like the Honda Accord, the furnishings. We have a principal amount due on a note from Sam Smith and a principal amount due on a note from Maggie Martin, and some jewelry and clothing. These are assets that are available for distribution at this time. So imagine that prior to this final accounting, some assignments of some of these inventory items have been given to the person that should receive them pursuant to the terms of the will. For example, if you look at the spreadsheet, the checking account ledger will have at this time no bearing on the particular circumstances of this Schedule C. But since Schedule C involves distributions to beneficiaries, I have this entire section that indicates what are distributions for this case scenario. And you'll see that many of them are the same as the inventory. In fact, the next slide, a little difficult to see in full, but the next slide indicates that they're both one and the same under our current circumstances. So if you look again at the distributions on the distribution sheet, you will see that the Honda Accord was given, assigned, or transferred in title to Mr. Porter. Mr. Porter is the sole beneficiary of this estate, correct? And as a result, he's going to get everything. Now, we have imagined that some of these items, as I pointed out earlier, have just been handed out to him. They've been given outright to Mr. Porter. And one of those items, the 2006 Honda Accord, was inventoried at $13,000, and so the date of the transaction where we gave it to Mr. Porter would be here. And this is the item received, and the transaction affected principal. And that's again part of the Principal and Income Act. That it's a whole different class that we won't be doing. And you can use fictitious dates that fall within the inventory period And that inventory period again is as designated here and should be the same on every page of your final accounting. The real estate installment due. Okay, this is a note that Mrs. Porter had with Maggie Martin. Maggie Martin had an installment note, and Mr. Porter now, it's been assigned to him. So basically it's a piece of paper that's a note that says Maggie Martin owes Mrs. Porter, but since Mrs. Porter is deceased and Mr. Porter is her beneficiary pursuant to the will, we'll assign that note to his benefit instead of her benefit. And that's what this distribution is indicating, that we assigned that note, and the principal amount owed on the note was $190,897, exactly the amount that's in the inventory. The same is true of this note from Sam Smith. You pick a date that this assignment would have taken place, but here's the note. It's a piece of paper, but it's an asset worth $4,065, and we're assigning it to Mr. Porter. So he can now collect on this note, and he will also collect on the installment note due here. Okay? And the inventory amount is listed here, just as it was listed here. So the carrying values of the assets that are being assigned to Mr. Porter is listed here, and that's exactly what was in the inventory. The furnishings and home, half of them were his already. So one half become Mr. Porter's. The clothing and jewelry were all hers, and so now it all becomes Mr. Porter's. So this is not an uncommon type of closing of the estate activity, where items that are not being sold by the personal representative, which by the way is the same person as the beneficiary. That's nothing that won't happen. It happens a lot, especially with a husband and wife team. Those items that aren't liquidated by the personal representative, meaning sold, are just handed over in kind, and a transfer document or an assignment document is given so that that person, the beneficiary of the item, has clear title to it. So that's a really important part of closing the estate. All right. And therefore, I mean, once you have this information filled in, which, like I said, is identical to the distributions ledger and identical to the schedule, to the distributions shown in the distributions, shown in the ledger are identical to the inventory. And what I guess I'm trying to stress is that the inventory states the value of the items, and you use that carrying value here in the Schedule C. These items that are listed here are listed at this amount in the inventory, and nothing is different. It's the same value today as it was when the inventory was done. And we total that amount here, and the zero amount as well, and Schedule C is completed. But the basic point of what we're trying to illustrate in Schedule C is what transactions have taken place that took property that once belonged to Mrs. Porter and therefore became a property of the estate, how they have morphed into the ownership of a beneficiary, and in this case the beneficiary is William Porter. We can move this property by an assignment, for example in the real estate note, and in the note from Sam Smith we just assigned the ownership rights to Mr. Porter. In the case of the car, they just transfer the title of the car. In the case of the miscellaneous clothing and jewelry, that just is transferred by a personal representative's assignment of interest, and actually Mr. Porter is assigning the interest to himself because he's the beneficiary, And he's the personal representative, and he's the only person with the power to make that transaction. Sorry about the dog bark. That's Max. So we're going to move on. You finish Schedule D once you filled that out, and we'll move on to the Schedule E. And we're almost finished. Really, we almost are. Thank you.